Hello guys, this is Daniel from Itagra. Welcome to this very brief follow-up of the last week trades. We are here on a very brand new website, and we can access basically the daily outlook from material, and these are the outlooks, let's say, for free, open to the public. So last Thursday we analyzed all the pairs, and there was not really much going on except from the yen crosses, and specifically we spotted a good opportunity on euro yen. Right, here we are. Basically we identified this strong rejection of the support 139, and the EMAs were almost crossing, or actually were just crossed. The pin bar is very large actually. The recent momentum and trend is definitely upwards. Not a very long one, if you see, it's more like on a complex retracement, but the rejection has been very, let's say, strong, very decisive. So we had a consensus among our group to go long on a break of the nose, not to wait for a 50% retracement here because of the very strong, let's say, directional move. Now we were right because the trade got triggered, and now it's up and running and even in profit. We'll come back to that later. The main target was basically 2 times our risk, nearly 250 pips, which is in line with the volatility for this pair. So our target remains 143 for next week. So I was saying basically that we are still in profit at the moment, although there has been a relatively strong pullback on the 4 hours chart. So if you see, we were triggered here. So if you look at the daily chart, we were triggered this level. Now we are here, so we are just, I think, 45 pips above in profits, and the last 4 hours were pretty much retracement mode. But what's very interesting is to look at the other yen pairs, specifically the pound yen. We didn't like the pound yen, first of all because the euro was showing much more strength versus the pound. So the relative, let's say, strength index was better, was higher for the euro. And second of all, because the setup itself, although similar, showed a very strong rejection of this level. Basically at nearly 7172, 71.8, there were 2 rejections. One was 3 days ago, and one was basically on Friday itself. According to our information, trading banks like the Danish trading bank were covering and hedging positions at this level, which shows that the big interest that these big banks, big players or fund managers had. What happens in these situations is the price reaches a certain level where there is a lot of pressure, a lot of selling interest, and big volumes are placed, and the price suddenly falls. Right, that's why we picked euro yen. That's why we're still in business, and that's why we will see where we go from the break even that we have now. So it's either go or break even, so no losses, which is good. Same story for gold. We published the forecast, or the actually it was more like a trading alert on Facebook saying that it's around this level because this intraday pin bar was advisable to buy. So we also bought at the break of the nose. We bought at 1317. We are in profit. It's not really gigantic profit. It's not really moving as we wanted, but still it's in profit. So now we are at break even, and we are in waiting mode, wait and see mode. We'll see what happens. The pullback, as you see on the daily chart, was just the barely minimum to the EMA 8. We would have, let's say, wanted to see something around 1300, basically 1300, but it was good enough to go long again. And we want to remind you that gold is certainly going up and up. First of all around the 1359, and then to most probably 1400. It's not only me saying that, but we all, let's say, agree on that, and especially big players like Soros and Rogers are buying gold aggressively. That shows confidence, that shows, let's say, confirmation. If confirmation that gold is gonna be a good buy, a good investment for the next weeks, if not months. And if you look at the monthly chart, it could be years again. It could be that the main bullish trend resumes, and we go again for all history highs. Alright guys, it was a pleasure. Stay tuned, follow our chart, follow our outlooks and posts, and just play with our new website. Bye bye.